Good afternoon, sir. We'll just take 2 more minutes. We'll start sharply by 3 o'clock. Okay. Thank you, sir.
Fine, madam. Thank you. Good afternoon to you.
Is it okay, sir? We'll just wait for 2 more minutes because I'm just waiting for the students to get admitted because we can expect 60 plus the crowd. So
That's
just
fine,
note that
madam. That's
3:05
absolutely
we
fine.
can
That's
start.
okay.
Sharp 3:05 we can start. Thank you,
Fine,
sir.
madam. Thank you. Madam, is the presentation visible? Okay. Thank you very much. Thank you.
Yes, so good afternoon. I think we can start with. So good afternoon, everyone. I,
Good
Dr.
afternoon,
Sheetal
madam.
Patil. Hello, sir. I, Dr. Sheetal Patil from Department of Masters in Commerce and Bachelor of Management Studies. And on behalf of other all department students, I'm welcoming you all for today's session on capital market awareness. Okay, so before we proceed with the session, let's introduce to our speaker for the day. We are fortunate enough to get our speaker for the day, Ravinder Singh Chawla, sir. He is the founder and managing partner at RSC Building, Skill Building and Consultancy Solution, LLP. He has been a learning and development facilitator, that is a training manager, and management consultant, motivational speaker, L&D, content creator, financial planner, and coach since May 2011. So he has approximately a decade of rich experience. Sir is a dynamic multi-skilled professional with over 29 years of rich and diversified experience as an entrepreneur. For almost 19 years, as while he was employed in corporates, he was working as a freelancer in sales as well as an entrepreneur for last 10 years, working independently. A successful track record of creating and drive of high-performance teams to market solutions across BFSI, office automation, FMCG, and media sector. An experienced and proficient trainer over last 10 years in the areas of leadership development, sales performance management, people development, as well as various behavioral skills too. As we are going to connect with the capital market topic, his experience is into HDFC Standard Life Insurance Company, Jeep Industrial Syndicate, and Business India. So with his rich experience of the capital market and the other understanding to develop, we will just talk with the sir. If any kind of queries you have, we all have learned, we all have understood some or other way, some of the part of capital market. We may have some myths in our mind, right? So let it be with your mind, whatever confusion, sir can have a right person to, clear your all doubts and bring more clarity toward capital market. So without wasting more time, I will request Ravinder sir kindly take a call. Thank you, sir. Thank you so much. Thank you,
Thank
students.
you. Thank you very much, madam. I hope the presentation is visible. Just a quick check.
Yes, yes, yes. It is, sir. It is, sir.
Okay, okay, all right. Well, thank you so much, madam, for giving me this opportunity of interacting with all these young leaders, because they are the future industry captains and are going to be, taking our country to become the fastest growing economy in the world. So as a citizen of the country, I'm absolutely, very, very eager to interact with them because they are the future. Uh, Equity markets, as we know, are very, very important because unfortunately only 5% of Indians, they invest in equity markets. I repeat, only 5%, right? Now that is because of a lot of myths which are associated with equity markets, and as we know, incomplete knowledge is always a problem. So that is the reason why BSC, the erstwhile Bombay Stock Exchange, now it is called as BSC Limited. The Investor Protection Fund of BSC Limited is taking the initiative of reaching out to the institutions, colleges, to conduct awareness sessions on capital markets, so that the young leaders could become aware about it. They could create wealth for themselves, and also they could enhance their knowledge about the financial markets. More so because, as we know, financial sector contributes maximum to the GDP of a country, and maximum jobs are also going to be getting generated in the financial services sector, right? So this knowledge is definitely going to be helping you going forward, and hopefully, because it's such a vast area, it's like a bottomless ocean. I am confident that today's session would, rekindle this desire in your mind to learn more about the capital markets, because obviously we cannot learn everything in just 1 hour. But I will try and help you understand about the key aspects pertaining to capital markets, which are normally not spoken about, or not many people are aware about it, right? And then we'll have a question answer session towards the end of today's session for about 15 odd minutes, wherein I'll try and answer all your queries, right? So just to quickly add on to what Madam said, I'm also a certified financial planner, and I'm also a certificate in various NISM exams. So Series 10A, 10B, Series 12, and Series 5A also. So let's go about learning about the capital markets. So we shall be discussing about quite a few topics today. Broadly speaking, we'll learn about why is there a need for investing money, what is the asset allocation concept, what is the difference between primary markets and secondary markets, right? What are the rights of shareholders? what if investors have some grievances, what they should be doing, right? And we shall also be talking a little bit about mutual funds. Okay, so this is just in brief about what is it that we shall be talking about today. Now let's begin with a case study. So this case study is about a couple, the Gogles, who are a young couple who started their corporate job, right? And like most of the people, they are absolutely very, very eager to have a good lifestyle. So they believe that they would want to focus on their lifestyle, spend a lot of money, and then whatever gets left behind from their income after they've spent money is what they should be saving, right? So like most of the people, the Gogles also believe that income minus expenses, right, is equal to savings, right? Now that's what they believe. Now let me ask you a question. Please write in the chat box, do you agree with their opinion? Do you agree with this equation, or is it that you think differently? It's different. Okay, well, Janish, so what's different? We can use that money for investment. Okay, fantastic. Well said, Janish. So how can we rewrite this equation? Or what is the correct equation in your opinion? Is it income minus expenses is equal to savings, or is it that we need to, reorient ourselves in terms of the correct equation for savings or investments? Any thoughts? In some cases, the equation is right. Okay, good thought, Pallavi. We'll discuss that. Uh, but income expenses is equal to investment plus emergency fund. Awesome, Janish. Okay, you've fantastic, very good. Fair enough, fair enough. So let's talk about it. See, the fact of the matter is that the markets would always want us to spend more and more money, right? I'm talking about the consumption goods. So there, the temptation would always be there. So, for example, right now you have Amazon, sale going on. You also have Flipkart sale going on. You have sales going on at Chroma, everywhere, virtually everywhere. And those people who've not, gone into sale, they would also be going it, considering that Republic Day is around the corner, right? So the market is going to be tempting you to spend more and more money, right? Banks are going to be inducing you to spend more and more money so that they could offer you some cashbacks, right? If we spend money, then obviously we may not be left with any savings. If you have money in your pocket and you want to spend more and more money, then you may not be left with any money to save, right? So this belief that income minus expenses is equal to savings is not correct, right? And that is actually one of the reasons why people are not able to save money. Correct? Say your institution, your great institution is really supporting you to learn about things the right way. I must tell you that I got this knowledge only after I had already worked for 10 years. So I started my career in 1992 at the age of 25, right? And I did not save anything till 2002, right? Which means I started saving only when I was 35 years of age. Why? Because I did not have any idea about it. We did not have any kind of financial literacy sessions in our institution. I did my MBA, we did not have anything, right? Neither did anybody speak about it during my career. Also, I was in sales. I used to earn very good incentives. I used to travel abroad every year because I used to win contests, right? And I used to live life king size, right? Now we all want you to create wealth for yourself, which means that you should make every opportunity of being able to invest money so that you could create wealth for yourself. and that means that we need to have the right attitude. Correct? So the correct equation is that we should first save money, right? The equation that income minus expenses is equal to savings is wrong. The correct equation has to be that you should first save money. Income minus savings should be equivalent to expenses, right? So we should first make sure that we go about having the right approach in our mind. Okay, so we should first save and then spend. Now we come to the question that is saving enough, or should we be focusing on investing money? Is saving the same as investments, or are they different? If they are different, what do you think? What's the difference between them? Is there any difference between saving and investment, or can we use both these terms parallelly? Okay, it's different. Yes, Karishma, well said. So what's the difference? What's the difference? How is investment leads to growth of money? Awesome, Siddhi. Very good. Good job. Yes, Janish. Very good. Yes, Shruti, Karishma. Well done. Very good. Well done. Well done, young leaders. Awesome. Right? See, let's accept it. We have a big monster called as inflation. Now, now let me give you an example. Let's say somebody who's focusing on savings puts money in FD, right? And let's say you get 6% returns from FD. Now, this is going to be taxable. The return is taxable. Let's say this person is in 30% tax bracket, right? Now, 6% returns and 30% taxability means that actually 1.8% would go into taxes out of 6%, which means you are going to be left only with 4.2%, right? Now, if inflation is 7% and you are getting 4.2% returns net of taxes, then that's a negative rate of return, right? We can create wealth only if we get positive rate of return. Right? Now that's a problem that we have, in our kind of setup, because as I shared with you, only 5% people invest in equity markets, right? Which means primarily most of the people, what they are getting is negative rate of return, right? We can move ahead only if we can reach our destination only if we move further, right? If we move away, but if you move ahead rather. But imagine if you move one step forward and one step backward, or rather 1.5 step backwards, then we are not going to be reaching our destination. Correct? So that is the first thing which is possible, which is important. Now comes the question: where can we invest our money? What are the different avenues where we can invest our money? Yes, please, your opinion. What are the different asset classes? Yes, please. What are the different asset classes? Where all can we invest money? Estate, real estate. Yes, absolutely right. Shubham. Yes, Shruti. Siddhi, sorry. Yes, Tuti. Yes, Karishma, Sanjana, Sunny, Divya, Shruti, Janish, Subhash, Praneet. Awesome. Awesome. You all have great knowledge. Well, madam, I must congratulate you, Sheetal madam. Your students are very, very intelligent. Very good. Yes, and as you all said very correctly, broadly speaking, we could divide the asset classes, right, into equity markets, debt markets, right, real estate, gold, etc. That's broadly speaking. That is what the asset classes are like, right? Now, what are the expectations which people would have from their investments? So people would expect their investments to be safe. They would want them to get good returns. They would want the investments to be liquid, right? Liquidity means that whenever they want, they should be able to get their money back, right? They should be able to sell off their investments, right? And they would want the returns to be tax efficient also, correct? So what is broadly speaking the trinity of investments? which means what are the top 3 things which investors need to keep in mind when investing money, right? Investment का त्रिशूल क्या है? So the threshold or the triad of investment is risk, return, and liquidity. Right? Now, why is this concept so important? See, if we are investing money from a short-term perspective, then real estate will not be good option. Why? Because the risk will be high. Correct. Similarly, if you are investing money from a shorter term perspective in real estate, then also there is a problem because liquidity will be low. It will not be easy for you to sell off your property in a short period of time. Correct. Similarly, if you are wanting to invest money from a medium and long term perspective, then you cannot ignore equity, right? Because equity only will give you high rate of return. Right? So all these things are very important. So when you are investing money, you need to keep in mind the risk, the returns, and the liquidity also. Now, historically, equity markets have given the highest returns amongst all asset classes. Right? Sensex, as an index started in BSE Sensex started in 1979. Right, and the base value was 100 points. Correct. Today in 2022 we are very close to 60,000. We had touched 60,000, we had crossed 60,000, but again we have come down a little bit, right? But it's close to 60,000. Now this means an aggregate return of 16.5% CAGR, compounded annual growth rate. Right? No other asset class has given as good returns, right? But a standard disclaimer that past returns does not mean that the returns would be sustainable in future also, because markets are subject to market risks, right? But there is no denying the fact that equity markets have given the highest returns, which means when we are investing money from a medium to long term perspective, especially long term perspective, we cannot ignore equity, right? But does it mean that every year the returns have been 16.5%? No, right? Certain years the returns have been negative also. Certain years the returns have been more than 30% also, so on and so forth, right? But the fact of the matter is, amongst all asset classes, equity markets have definitely given the highest returns. Right? Now, why are equity markets even more important today is because of the startup culture that we have. Right? Now, I'm sure all of us know about it, that India has the second largest number of unicorns, those startups which have a valuation of more than 1 billion US dollars. Right? I'm sure you all would have been watching the Shark Tank India program also on TV. But just imagine all these startups would be going public, would be becoming public listed company in the times to come, right? So gradually speaking, the Indian economy is moving from the unorganized sector to the organized sector, right? As of now, only 30 odd percent is the organized sector, right? Now going forward, imagine all this, the economy going through a transformation, and everything getting into an organized sector, right? Imagine the kind of growth it would give to the equity markets, right? So this is actually the best time that we are in, right? And there is going to be a huge momentum which is ushering in, right? Now, very important thing is the asset allocation concept, which means that should we put all money in equity? No, right? Let me give a very simple example to you. Let's say you guys are traveling and you have, let's say, 50,000 rupees cash with you, right? And let's say it's an overnight journey in train. Would you put all your money in one pocket only? No, I'm sure you wouldn't, right? You would apportion that money across different pockets, right? That is what asset allocation concept is similar to, which means you should not put all your money in only one asset class, right? Now tell me, let me ask you a question. would every investor have the same asset allocation ratio, or would it be different from different for different investors? Would my investment approach be the same as yours, or would it be different? What do you think? Different? Yes, absolutely, absolutely. Shruti, Pallavi, Shubham, Akanksha, Anuj, Ripika, Karishma, Neha, Rudra. Fantastic. Very good, Ashwarya. Yeah, right. Very good, Ashwarya. As per the risk appetite, yes, it would depend upon the goals. It would depend on the horizon of investment, right? It would depend upon, how much of returns would I have to get to be able to achieve my goal, right? So all these things are different, are important, which means that every investor is different, right? We should not blindly copy someone, which means that today, let's say if you get a message, right, wherein let's say somebody says that invest money in that company or apply in that IPO, etc., etc., you should not blindly adopt that, right? It depends. Every investor is different. What my style is would be different from your style. Correct. See, this is very important because many a times investors, they believe in the herd mentality, right? They start copying others, right? So as you guys have rightly mentioned about, it would depend upon the risk appetite, it would depend upon the horizon for investments, it would depend upon your goals, right? All these things are important, correct? So let's say somebody may say that I would have 80% allocation to equity and 20% to debt. It's like the thali which we eat, right? Now in thali there are multiple bowls which are there. So just like that, asset allocation is like that. Similarly, somebody may say that I would want 60% allocation to equity, 20% in debt, and 20% in real estate. Somebody will say that no, for me, real estate is only 10%. I would want 10% in gold. Right? So every investor is different. Okay. Now, the richest people in the world are people who are running their own businesses, who are business owners, right? Which means if we want to earn money, if we want to create wealth, we would also need to be associated with business, right? But it is not easy for us to set up our businesses. We may want to do some, we may want to get into service. We may be doing farming, right? We may be into social service, correct? But if we want to create wealth, then we can also create wealth by becoming shareholders in businesses, right? Through the equity markets, we can participate in the businesses, and we can create wealth for ourselves, right? So let's consider an example. Let's say a company is like a chessboard, and just like a chessboard has 64 squares, imagine that each square represents a company, right? So imagine this is a company which has got 64 shareholders, like just for example. Now if let's say the value of each share is 1 rupee, then in that case the market value of this company is 64 rupees, right? Very simplistic example, but the idea just what we are talking about is that if you want to become a part owner in the company, you can participate in the shareholding of that company, right? Now how would you be able to create wealth? Because going forward, this company's performance may be good. If the company's performance grows, if the company starts doing well, your shareholding value would also grow, right? So we must keep all these things in mind. Okay, so which means that if you want to participate in the oil refinery business, you don't have to set up your oil refinery business, right? You can buy the shares of an oil refinery company. Just an example, right? Now how do we buy the shares of a company? Okay, so either we could participate in the equity markets directly, correct? Which means that we invest in the equity of a company. That could be through the primary markets or through the secondary markets, right? Now, what are primary markets? Any idea? What's the difference between primary market and secondary market? I'm sure you guys would know. IPO, yes, Tuti, right? Initial public offering. So whenever a company is coming out with, decides to go public, it wants to offer its shares to people, right? Then it would get into the primary market. Yes, Karishma, very good way of explaining it. So primary market is first hand, and once the company has got listed, it would be, an already listed company would be in secondary market, right? So in secondary market, you would buy and sell through stockbrokers, through the stock exchange. Very well done, young leaders. Good job, fantastic, right? The other way is that if you think that you don't have enough time, you cannot choose which company to invest in, right? Then you could invest through mutual funds. So mutual funds is an indirect approach, right? That is investing indirectly. There you rely on a fund manager, and the fund manager takes decisions on your behalf, which company to invest in, right? When to invest in, when to move out, etc., etc. All decisions are taken by the fund manager, right? Now, you could invest in mutual funds either in lump sum or systematically, correct? I would recommend to you that do not invest in lump sum. Okay, do not invest in lump sum because the risk is more, because the markets would be volatile. I'm talking about the equity markets, right? In equity markets, do not invest in lump sum. So the best way is to invest systematically, right? Systematically means you invest, let's say, every month. It could be every week, it could be every fortnight, right? It could be every quarter also. But systematic investment would be the best investment, right? Let's say you get bonus or you get some gift from someone. Then in that case, what you can do is you can go for systematic transfer plan, which means lump sum money you invest in debt, right? And systematically through systematic transfer plan, you invest in the equity market, right? That is systematic transfer plan. Okay? So just a little bit about the primary market. So as you guys correctly mentioned, whenever a company wants to offer its shares to the general public, right, it would get into the primary markets, correct? So it's also called as a new issue market, right? Secondary market is when the company has already got listed. Now all the buying and selling would happen through the secondary market, through the stock exchanges and the intermediaries. Now, primary market is not just about IPO, although that's the most common thing which we are aware about. But many a times companies, they would also come out with FPO, follow on public offering. Let's take an example. Let us say, a particular company has got listed. Now a particular shareholder has got 20% stake. It could be promoter, right? So what the promoter wants to do is that it wants to offload, or let's say divest the stake, right? Let's say the entire stake. So the promoter बोल रहे हैं कि ये 20% जो शेयर है ना मेरा, ये मैं पब्लिक को और देना चाहता हूँ, right? So the company is already listed. So the company has again come to the primary market, right? And now again the people can participate in the primary markets, right? So that's called as follow-on public offering. Similarly, many a times, let's say company requires more capital. So the company will come to the existing shareholders. The company will say, we want to raise more capital from existing shareholders. We want to offer more shares to the existing shareholders, right? That is what is called as a rights issue. Okay. Similarly, it's quite possible that the company may have enough cash with them and they want to reward their shareholders, right? So they will then come out with a bonus issue, right? So these are different kinds of terminologies which are there. Okay. Now, should the markets be regulated? Yes, I'm sure you would say yes, right? So who is the regulator for the capital markets in India? Quickly, please. Who's the regulator for capital markets? SEBI. Yes, Jainish, Suti, Pallavi, Karishma. Well done, as always. Right? So as you rightly said, SEBI is the capital markets regulator, right? Securities and Exchange Board of India. Now, what has SEBI been trying to do? SEBI's mandate primarily is to protect the interests of the investors, right? And also promote the development of securities market and regulate it properly. See, today we are all absolutely upbeat about the capital markets because we know that SEBI is taking care of it, right? So just like वो एक CCTV कैमरा कंपनी की टैगलाइन है ना, ऊपर वाला सब देख रहा है, here also ऊपर वाला means SEBI is taking care of us, and that is what is giving us confidence, right? So SEBI has done a wonderful job in ensuring that uh, new innovations are brought in, right? There is efficiency and transparency in the market, all these things, right? Now, if you want to invest in the equity markets, what is it that you need to have? You need to have a trading account and a demat account, right? So both these things are required, which means you will first have to undergo a KYC process, know your customer process, right? Now, for that, you will need to give your ID proof and address proof, etc., etc. Okay. Now, what are the important things you will need to keep in mind? As we discussed, we will not just go by messages, some tips, etc., etc. Just because somebody is asking you to invest money in and buy shares of XYZ stock, right? You need to collect information. You need to do some research. You need to do some study to be able to invest money, isn't it? So what kind of things you will keep in mind? Tell me, what are the basic things you will keep in mind while choosing which company stocks you want to buy? Tell me, please. Very good, Sunny. Fundamentally strong. Absolutely, Jay. Very good, very good. Awesome. You guys are very, very intelligent. Amazing. Yes, goodwill. Shruti, I'm glad you mentioned goodwill. Well done, well done, well done, all of you. I'm sorry, I'm not able to, take everybody's name because, the speed at which you guys are sharing is amazing. Thank you, thank you. So just quickly speaking, remember two things. One is qualitative, right? Qualitative factors, and other is quantitative factors, right? So as somebody said, goodwill or the culture of the company or the quality of the management, right? Or the corporate governance of the company, all these things would be part of the qualitative factors, right? And the profitability of the company, the strength of the balance sheet, right? The financial ratios, etc., etc. All these things would form part of the qualitative aspects, right? Just 1 minute, please. Yeah. Okay. So you would want to invest money in a company which has got good management, a company where profits are growing, right? Which has got a healthy balance sheet. So do not invest money just because somebody is asking you to invest money. Today you have all a lot of information available. We can collect that information and we can take informed decisions, right? So do industry analysis, do analysis of the profitability of the company, the track record of the company, the future projections. All these things are important, right? Now it's quite possible that you may say that I don't have time or I may not be able to do that. In that case, you can take professional help. There are a lot of people today, they can support you, but you must do due diligence, right? Make sure that, see, it's your hard-earned money, right now you may be investing through your parents' money, but going forward you will start earning yourself. Maybe some of you may have already been doing internships, you may have been earning money, right? But whatever it is, it's going to be our hard-earned money. We need to invest carefully, right? But if you think that you will need professional help, you can take help of brokers, there are mutual fund distributors, there are SEBI registered investment advisors also, right? Now, for applying an IPO, there is a wonderful facility which is available called ASBA facility, applications supported by blocked amounts. And I'm sure you would be aware about it. But just quickly for the benefit of everyone, see earlier what used to happen was about 10 odd years back, what used to happen was that the money used to, when I'm applying for an IPO, the money used to get debited from my bank account, right? Now the decision whether I would be allocated the shares or not used to take about 7 days, 8 days, right? My money has already got debited from bank account, which means I wouldn't get the interest on my savings bank account for the money which I have used to invest in IPO, right? But now with the ASBA facility, the money doesn't get debited; it only gets blocked, right? Which means I continue to get interest on the particular amount, irrespective of whether the shares get allocated to me in IPO or not, right? So UPI facility also offers you ASPA facilities available in UPI also, right? Google Pay or Phone Pay or Bheem app, whatever, right? Many companies, they also offer 3-in-1 account. So bank account, trading account, demat account, all together. Right? Now, very important topic is the rights of shareholders. Now, unfortunately, many investors, they are not aware about their rights. See, whether you are investing one share in a company or whether you are investing 1 lakh shares, your rights are the same, right? You are entitled to a lot of privileges because you are a part owner in the company, right? So you have rights to receive information pertaining to the performance of the company. You have a right to receive information pertaining to the annual general meeting and emergency general meeting, etc., etc. You have a right to participate in various voting which happens pertaining to important decisions, right? You have a right to dividend or bonus share whenever it gets declared by the company, all the corporate benefits, right? uh, you have a right to ask questions to the top management. You have a right to check the books of accounts of a company. There have been many examples wherein a shareholder has complained to the company about something not going right, and the company has had to take action, right? The recent example being of ICICI Bank. You may be aware that the company, took action against the erstwhile chairperson. You may not know this, that the actual complaint was filed by a shareholder originally, right? So the shareholders can also act as whistleblowers, right? So just like we say, jago grahak jago, it's important that the shareholders are also aware about their rights, right? A lot of initiatives have been taken by SEBI. For example, now eKYC is also possible, right? Very importantly, when you are opening a trading account, do not, sign a blank. Do not offer to accept the broker's requirement of signed power of attorney, right? It's not a compulsory document. Do not issue power of attorney to the broker, because the broker can actually sell your shares on your behalf without you even getting to know about it. The broker may insist that you issue a power of attorney, but remember, it is not mandatory, right? Similarly, you can take loans against your shares. You can pledge your shares whenever you want, and after you've paid back the loan, the shares would get repledged back to you, right? Very importantly, we will talk about it again. When you're opening a demat account, if your holding value, equity holding value, is less than 50,000 rupees, you are entitled to a basic services demat account, which means it would not cost you any money, right? Only if your holding value is above 50,000 rupees, then the demat account would cost you something. Okay, we will talk about the product labeling later. Very importantly, nowadays people who are, for example, the registered investment advisors, SEBI has also capped their fees. So they cannot charge beyond a certain fees to the investors. All these things are being done from the perspective of the investor protection. Okay. Importantly, when you sell shares, okay, so remember the transaction is T plus 2, right? If you sell your shares, let's say today, so today is, for example, Friday, right? So this after 2 working days, which means on Tuesday, right? So you will get, if you have sold your shares, the money will come to you on Tuesday evening, right? Similarly, if you have bought shares today, the shares will be available to you on Tuesday. T plus 2 working days, right? So remember this thing. Do not give power of attorney to the investor, right? Unless you want to do that because you are traveling somewhere, you are abroad, all that, right? Uh, when you sell shares or buy shares, you will get a contract note within 24 hours of the transaction. You must go through that document, make sure that everything is in order, right? The brokerage charge is what was agreed upon. The share price, what you sold at, was what was told to you, right? All those things. Even in case of trading account, you will get a statement every quarter, right? Do not keep excess money with the broker. It could be misused, right? Do not allow the broker to play or to trade on your shares, right? And that is possible only if we are vigilant. Do not blindly trust anyone. See, these days, uh, you there would be very few people whom you can trust absolutely very confidently, right? So as far as money is concerned, don't trust anyone, right? Uh, Importantly, do not go by any tips, so-called tips, right? So there are a lot of people who would try to take advantage of it. See, very simply speaking, I may have bought some share. Now I want the share price to go up, right? So I will try and sensitize you. I will try and push you to buy that particular share, right? Why? Because I want the share price to move up so that I can sell at a profit, right? So nobody could be. You should not trust anyone, right? And do not issue your pass. Do not share your password with anyone, right? Make sure that you keep changing it on a regular basis. And also, whenever you get a statement, please read it. Please go through it. Please be vigilant. SEBI has made sure that they have made system that you are supposed to get SMS after every transaction, or whenever there is a debit transaction from your demat account. Make sure you go through that, right? All these basic things are important. Okay, so be aware about your rights and responsibility. In equity markets, in a short period, the market would be volatile, right? Because in short period, the markets would be very volatile. Do not get into a panic mode just because the markets are going down. Do not say मैं सारे सब शेयर बेच दूंगा क्योंकि market नीचे आ रही है, right? Neither should you become too excited just because the markets are going up, right? So neither should you be too excited, nor should you get into a panic mode. Deal only with SEBI registered investment advisors. Make sure that you don't act on any unsolicited tips. Please do share all these things with your parents also, very important, right? In case there are any grievances, SEBI has provided for appropriate mechanism to get the grievances redressed. So there's this dedicated website which is there, right? scores.gov.in. You can go through that. They've also provided for a call center, email ID, all those avenues are available for us to get our grievance redressed, right? As we know, in the secondary market, stock exchanges play a very important role. You can call up a broker, you can visit a broker's office, you can send an email to them to get your orders placed, right? But remember, as we discussed earlier, they are supposed to issue your credit note within 24 hours of the transaction, right? Make sure you go through that. completely, right? Uh, the pay-in and payout mechanism is T plus 2 working days, as we discussed, right? You can get your grievances redressed. Please make sure you get your grievances redressed, even if, let's say, you have it against a broker, right? Even stock exchanges have provided for adequate mechanism to get all the complaints redressed, right? Demat account, where that the shares would be available in an electronic form, right? So there are broadly two agencies in India who facilitate that. One is NSDL and the other is CDSL, right? You can get your demat account opened anywhere, but even there, as we discussed, you are entitled to a basic services demat account if your holding is small. That has been done to support small investors, right? So if your holding value in equity is up to 50,000 rupees, you don't need to pay any charges for it, right? So you must you must take informed decision. In debt, this limit is 1 lakh rupees, right? As we discussed, even your demat account would send you a statement every quarter. So you must go through that so that you are aware about what all transactions happened, right? If you have any grievance, you can get it redressed, right? Mutual funds, quickly speaking. So mutual fund again is a very good way of investing indirectly, right? Uh, so that is also very well regulated by SEBI, right? All mutual funds are very, very safe. They are governed governed under the regulations of SEBI, right? Uh, so in mutual funds, various investors, they pool their money. They allow a fund manager to manage their money. The fund manager invests on their behalf and would apportion, would distribute the returns amongst all the investors considering their investments, right? uh, there are different types of mutual fund schemes which are there. So you can choose where to invest money considering multiple types of factors, right? Your investment objectives, the style of investment, the structure of the mutual fund, the structure of the fund, etc., etc. So take informed decision. There are multiple types of schemes which are there. Imagine you go to a bus stand and you find buses going towards different destinations, right? Now you would board the bus which will take you to your destination. Same is the kind of approach in mutual funds also, right? Very importantly, SEBI has mandated that all mutual funds, they mention about a riskometer, right? So just like you have a car dashboard mentioning about a fuel gauge, right? It indicates where the fuel is, whether it is full level or middle level, so on and so forth. Similarly, mutual funds have a 6-level indicator. It's called as riskometer, right? So just a look at that riskometer would help you understand how much is the risk that particular scheme is carrying, right? It will help you take informed decisions. Right? BSC has launched a portal, BSC Star MF, right? You can buy and sell through that portal also. Irrespective of whichever mutual fund you want to invest in, you can take help of BSC Star MF portal and invest through that, right? So it will also help you get a lot of reports and is a very, very useful tool. Okay, so this is what we discussed today. Multiple things. I'll be happy to answer any questions that you have. Very importantly, before we end, because this year is going to be the 75th year of our Independence Day, of our independence. To commemorate this occasion, SEBI has launched, an event, and that's a nationwide financial markets contest, right? The objective is to support enhancement of financial literacy, right? So I would exhort you to, I will share this picture with Sheetal madam. She'll share it with you all. But you can go through this website, investor.sebi.gov gov.in. And since you guys have very good knowledge, all of you, I am sure you stand a very good chance. The winning team, it's only for college students, right? And the winning team would get 1 lakh rupees prize, and it is being managed by SEBI and NISM. NISM is the educational arm of SEBI, right? So there is going to be essay writing. It would involve essay writing and also quiz, right? So please do participate in this. Okay. These are our coordinates. We are a training company. We also conduct a lot of sessions to support students improve on their employability skills, and also various courses pertaining to preparation of NISM exams. Okay, so looking forward to being in touch. I hope you found this session to be useful. I would be happy to answer any questions that you may have. Thank you. Any questions, please? Could you explain something more about intraday trading? Okay, fantastic. Very good, Janish. See, in equity markets, it's not just about investing money from a long-term perspective, but you can also earn short-term profits. Okay, requesting everyone to kindly give their feedback, please. I have shared the feedback link in the chat box. Kindly do not leave the meeting unless you give your feedback, please. That's going to be important. So kindly, the feedback link is there. Kindly see if you can open the link. Right? Okay, so Janish, you can also do trading to earn short-term profits. So what is trading? So trading is actually taking appropriate action, whether to buy or sell, so as to take advantage of the short-term movements. Right? For example, if I am anticipating that the market would be, a particular share price would go up in a day, right? So I can buy the shares at a lower price point and I can sell it at a higher price point, right? Similarly, I can also do short selling. So short selling means that if I'm anticipating the share price to go down that day, I can sell the shares intraday at a higher price point, and then I can buy it at a lower price point, right? So trading basically is, the most common approach is intraday, but then there are other approaches also. For example, BTST, buy today, sell tomorrow, right? There are also approaches available wherein you can buy and sell within 15 days, or you can square off your transaction in as long as 15 days. So there are various various options which are available. Okay. I hope I've been able to answer your question, Janish. Pleasure, Aryan. Thank you. Request you to kindly give your feedback, please. Because this is going to be important for us. Any questions? Any more? Yes, please, Janish. Most welcome. Sunny, futures and options is risky, right? It is like saying that when you start investing money, you may be let's say at level 1 when you start doing it, and you could say that future and options it at a higher level. Let's say standard 10. When you start investing, you may be at standard 1 level, right? So it's a part of derivatives. It is much more riskier. I would encourage you to start investing from a long-term perspective. Start investing money, and later on, once you feel that you have got good knowledge, keep learning about it. Then of course you can use derivatives also, right? Because it is, while there is a probability for you to be able to make good profits also, but remember there are risks and associated with it, and there is a chance to make losses also. Any apps which Janish, all these apps are definitely They are utilizing technology. Conventionally speaking, there are the brick and mortar companies also which are there traditionally. All the banks, so HFC Securities, ICICI Securities, Axis Securities, Kotak, all those companies are also there. Those are the traditional companies. But nowadays there are a lot of fintech companies also which have jumped in. Personally speaking, just to answer your question, all are safe, no doubt about it. Personally speaking, I prefer the traditional companies more. So that's my opinion. But they're all safe. And today, SEBI is regulating all these, and there is no reason why anyone could be called as unsafe. Okay. Yeah. Any question, please?
Anyone has any questions for sir?
I hope I have not missed any question.
No, sir. There are no other questions coming in.
Right.
Okay, so
Sure.
Dr. B.M. Rao. Thank you very much. So myself, Dr. happy to give the vote of thanks on this very vast and in-depth knowledge and hands-on experience has made the session pretty simple in layman terms. I hope that the information may have really kindled the interest among the students' fraternity, and with this very basic and cautious information sharing, they shall be able to as long-term investors in the stock market. I thank our coordinator, Dr. Sheetal ma'am, for taking this initiative and giving this value-added webinar to all of us. I also thank our teacher colleagues for their preparatory work for ensuring the success of this webinar. Last but not the least, thank our principal, Dr. Shrikant Sawant, our CEO, Dr. Mala Karkar, and the management. Webinars. Thank you, sir. Thank you for all the participants for making this webinar a great success. Thank you.
Thank you, sir. Thank you very much. Thank you, all young leaders.
Yes.
Thank you.
Yes.
Namaskar.
Okay, sir. Thank you.
Thank you so much, sir. Thank you, Rai, sir. And thank you, Rai, sir, for giving the opportunity. It means a lot. Actually, I'm in train, so I could not talk much. Thank you so much, students. Thank you so much, sir.
Thank you,
Students,
madam.
kindly fill up the both of the links which are shared. One is on behalf of... Yes, sir. Me too, me too. Thank you so much. Thank you. Students, once feedback is filled up, you may leave. Once feedback is filled up, you may leave. Thank you.
Feedback and then you can leave.